So Symphony is essentially an intent-based perpetuals aggregator that allows a trader to execute any position across any chain at near instant speeds. Imagine, you see the market picking up, you want to long Ethereum. All you really need to do is choose an asset, Ethereum, and a leverage amount 10x, and our solvers basically go and find the best path, protocol, liquidity for this position, and they give it back to you. And let's say the solvers come back with, the best trade is half on Cadence Perpetuals and half on GMX. The user can just in one click instantly execute this trade.
Welcome to the Edge Podcast. I'm DeFi Dad here with Nomadic from 4RC. Today's show spotlights the new flagship protocol for decentralized perpetuals on Canto called Cadence. In this episode, we'll cover how Cadence is building an intent-centric perpetuals aggregator, how Cadence compares with other Perps protocols, and how they plan to launch a trading pair for one of the most popular crypto stocks on-chain. But before we do, just a quick word from our sponsors who make the Edge Podcast possible. Introducing Flat Money, the first decentralized, delta-neutral FLATCOIN built on Base with sustainable yield that's completely untethered from legacy finance. Because DeFi needs an uncensorable based unit of currency. You can mint unit with RETH, which is held in the protocol's shared liquidity pool, where it's borrowed by leveraged traders. As a leveraged trader, you can deposit your margin collateral and go long on RETH. If you're trading in the perpetual futures market, you'll pay unit holders to open leverage positions. If you're holding unit, you'll earn yield from liquidations, borrow rate, and trading fees. Preserve your purchasing power and offset your exposure to crypto market volatility. Learn more at flat.money.
Restaking summer is dawning, and SWELL is expanding. Harnessing the power of RSWETH, SWELL is building the Layer 2 for liquid restaking. That means native restaking yield on a chain built with Polygon's ZK EVM technology in collaboration with AltLayer, Chainlink, and EigenDA. Look out for SWELL's Layer 2 in Swell City.
Introducing the MANTLE liquid staking protocol, MANTLE LSP, a permissionless, non-custodial ETH liquid staking protocol deployed on Ethereum L1 and governed by MANTLE. With MANTLE LSP, users can stake ETH to instantly receive METH, earn yield and accumulate rewards the longer you stake. METH is the value accumulating receipt token that will give you access to expanded yield opportunities. Stake and watch your yield grow with MANTLE LSP.
For most of us, our crypto journey started with MetaMask, and now with MetaMask Portfolio, we can do so much more. MetaMask Portfolio puts you in control. Use the dashboard to see all your assets and balances across your wallets in one place. The buy feature allows us to buy crypto assets effortlessly with fiat options such as PayPal or credit card. The swap feature allows us to swap any tokens anytime by finding a selection of available rates. The bridge feature allows us to bridge between networks including Ethereum, L1s, and L2s based on the best price and fastest delivery time. And with the stake feature, anyone in a few clicks can stake ETH and earn rewards. Do more in Web3 your way with a safe, simple, and convenient tool that's all in one place. Track and manage your Web3 everything at metamask.io/portfolio. Introducing Kelp DAO, the first liquid restaking platform for LSTs. With Kelp, anyone can deposit Steth by Lido, ETHX by Stater, or SFRX ETH by Frax, and mint a liquid restaking token called RSETH. With RSETH, you can participate in your favorite DeFi platforms and get 100% of all EigenLayer points, plus Kelp miles. A fresh wave of restaking is here, restaking that's liquid, rewarding, and convenient. Learn more today at kelpdao.xyz/restake.
It all started so simply with CryptoKitties and Maker on Ethereum, but quickly became complex with more applications and many chains. Today, everyone agrees UX issues are the biggest blocker standing in the way of crypto adoption. Introducing Avocado. Multi-chain UX redesigned from the ground up. The first wallet to abstract networks, accounts, and gas. one gas tank to pay transaction fees on all chains in USDC, and native access to INSTADAPP's powerful, custom DeFi strategies. Avocado, one wallet to rule all chains.
All right, let's introduce Vivaldi and Mozart, who are CEO and CTO of Symphony Labs. Vivaldi and Mozart, welcome to the Edge podcast. How are you doing?
Doing great. Appreciate you guys having us on.
A little over a week ago, Cadence Protocol went live on Canto, and Cadence is now one of the newest, most popular dApps on Canto. I would compare it in some ways to GMX on Arbitrum. There's an ability to trade popular tokens like Atom or Canto or ETH. And there's a little over 23 million, I believe, as of today in trading volume in total in just the first week here. So congrats on that. We want to dig into, what is next? Like, what are you building as an intent-centric Perps Aggregator? And this is going to allow us, I think, to access liquidity on other L1s and L2s. But for now, we can access that all through Canto. So, guys, why don't we just kick off with your background, and then would love if you can share more about the story of actually founding Cadence Protocol.
Yeah, definitely. So I can start off with a little bit of background on myself, then I'll pass over to Mozart. I can introduce the rest of the team as well. So I've been in crypto since about 2015. First, I was just, the classic trader, buying whichever coins look good on the market. And then I became a blockchain engineer for some of the larger companies in crypto. And that's where I met actually Mozart, Beethoven, and some of the rest of our team. And then I left to join Consensus and join the DeFi team there on MetaMask. So I focused a lot on building infrastructure for the wallets, things like, MS swaps, RMs, aggregators, all around those different DeFi sectors. And that kind of merged into our vision currently for Cadence as well. I'll pass it over to Mozart.
Awesome. Yeah, I go by Mozart here at Symphony Labs, and I'm in the CTO role here, so kind of handle a lot of the technical developments we work on here at Cadence. In terms of getting into crypto, got in around 2017, and like a lot of people, I stumbled upon the Bitcoin white paper, read it, and was kind of hooked ever since. So started at a big consulting company and met two of the co-founders there, and then most recently was at Kraken Exchange, building out a lot of their production level, like smart contracts and DeFi infrastructure. And I think a big thing we're conveying is we want to take a lot of the experiences, we've had at these large production level crypto Web3 companies and bring that to Cadence, bring some sort of level of professionalism in the Web3 space here. But yeah, good to meet you guys. And thanks again for having us on.
Correct me if I'm wrong, guys, but there's two other core contributors, and I think they go by names Beethoven and Chopin. Maybe like how do they fit into the team? How'd you meet them as well?
Yeah, so back when me, Mozart, and Beethoven all worked together around like 4 or 5 years ago at this point as like blockchain engineers for a consulting company. And that's where we all kind of met. When we're like the core blockchain team back there. And obviously then we went to our different public sector companies, Mozart with Kraken. We had Beethoven went to XLR and Kraken as well before XLR. And that's how we all basically met. And then Chopin, he used to work more in the traditional backgrounds of traditional finance type backgrounds, or more inside like the aerospace sector. He actually worked on building one of the first hypersonic spacecrafts. So that's where he kind of comes from. And then, we all kind of met. We saw some big issues in crypto and decided to, really start Cadence.
Okay, yeah, why don't we just hop right into it? And I think we should just ask the question, like, what is Cadence? Maybe give us like the high level overview, how you guys like to describe it.
Yeah, so I guess, surprisingly, for us, luckily, that's kind of a tough question at some level. Cadence really evolves almost every 6 months in our roadmap. So we've basically crafted several phases and steps of where we're taking Cadence to like ultimately create the future of crypto we envision. So first, it's perpetuals protocol on Canto, and they'll kind of transform into an intent-based perpetuals aggregator. Then it becomes an aggregator for all crypto execution at some level. And then soon it'll become a base layer infrastructure that people can build upon. But starting off with our initial launch, which, DeFi Dad brought up initially, we launched a perpetuals protocol last week on Canto. And the goal of that protocol is essentially to create the most capital efficient use of liquidity with RWAs, CSR, and LSDs. And currently, you can trade with C notes. That's essentially a Canto stable that grows. Currently, it's at 8% every year APR. And you can trade Canto, Ethereum, Atom, and we'll be adding, more RWAs in the future and our own stablecoin as well, which is backed by T-bills. And then later is a Symphony launch about, 5 months from now. And, I'll stop there. I'm sure we'll get into Symphony and everything around that later on.
Guys, I want to dissect some of the familiar parts of what I see on the Cadence application. So if you're familiar with, let's say, GMX, what else can you call out here that we might be familiar with as DeFi perps traders? Like I see CLP, which I was thinking of GLP. I'm thinking of the composition of that CLP as opposed to what we might have used with something like GLP. Even would love to know as simple of things as what trading pairs we might expect next, considering what we have available today.
Yeah, definitely. So one of the big trading pairs we're actually waiting to announce on your guys' podcast will actually be a stock. So I'm curious if you guys have any guesses of what this stock could be.
Oh, I like this. It could be Tesla. It could be Coin. It could be a lot of things. But yeah, what do you got, DeFi Dad? What's your guess?
The one that I thought of immediately was NVIDIA, just thinking of really hot stocks.
Yeah, so it'll be Coin. So yeah, Nomadic was correct. So we're thinking Coin, we should be the first perpetuals, decentralized perpetuals protocol, which is not synthetic, to actually add Coinbase's stock into it. That should be happening around the middle of next month once we complete the integration. So that's one example of an RWA, we're adding into the system. Obviously, there's things like, bonds and these different other systems, which really make the whole space really interesting with perpetuals, because imagine you put a bond into the pool, then people can do perpetuals on a bond, which essentially is leveraging a bond at some level. So your APR dramatically increases than usual. So lots of interesting types of ways we're thinking about RWAs. And also we can go more into CSR and, the LSD side as well if you guys are curious. But the goal is that we want to create the most capital efficient pool for Canto, but also for perpetuals trading. And this allows us to essentially create these mini microeconomies on Canto. Having this multi-asset pool is very critical for the initial launching of a chain, to make a chain bigger, and also to really just grow value inside an ecosystem. So that's kind of the initial goals of it.
Hey, so guys, just on Coin, how are you going about this? I guess from the legal or regulatory side, I think it's really interesting that you can do this. It's something that I haven't seen a lot in the space, other than I guess you see synthetic versions of stocks sometimes pop up. But yeah, is there just anything you can kind of break down just on the back end, how you're making this possible, and maybe what type of oracles would be involved, or where you're getting the pricing feed?
So, I used to work for an RWA startup, just part-time a little bit, just for fun, about a year ago. And the legality side when it comes to RWAs, especially as, a dev, we're all devs here, very proficient devs, you don't want to really get into the whole legal side. It's just going to take away time from what you're actually really good at, which is building. And that's something which we want to stay away from, but we do want to add RWAs into it. So there's lots of RWA providers on Canto itself, which are native to Canto, part of the whole neo-finance vision of Canto itself. And what we're doing is basically implementing those RWAs into Cadence Perpetuals. And one of them is launching Coin in a few weeks. And the interesting part about this is, to what you said before in Nomadic, is that most perpetual protocols, if they did ever want to do this, it will be a synthetic version. You can't really do anything with this. It's just a fake oracle, or it's an oracle just giving a price of what this valued at coin stock really is. But this is real. You can like do a perpetuals trade, do a 10x long on coin, close out your position, get your money back in coin. They can go onto these third-party providers and like get the real value of the stock from their websites. So that's something which is really interesting and really real about what Cadence Perpetuals is really doing. It's real RWAs, not synthetic assets. That's going to be really interesting and exciting about the whole coin launch next month.
And what type of leverage should we expect on coin?
Yeah, so it'll be 50x leverage. That's what we're expecting to do with that.
Another few simple questions in terms of features available to Perps traders. How much leverage can you get for the different trading pairs? I think there's 3 of them right now, ETH, Canto, and I'm forgetting one. ETH, Canto, and Atom. So how much leverage can you get? And then can you talk about the composition of CLP? What's the rough percentage for each of the different assets that make it up?
Yeah, so currently it's those 3 assets which you can trade on. So it's 25% of the pool is Canto. And that's where we see most of our trading volume. But we've actually capped Canto to 3x leverage. So that's to kind of mitigate some of the market manipulation around it. It's going to increase, obviously, of course, also with Canto's liquidity increasing over the last week. You can increase the cap, which we're planning to do later this month. And then there's Atom, which is 50x leverage, Ethereum 50x leverage. So that's kind of the initial coins we're doing. But over the next few months, we'll have a lot more coming in.
One of the terms that we mentioned earlier, intent-centric, can you dumb that down? It's a word it's a phrase that we're seeing with newer DeFi protocols. And obviously it definitely, it differentiates, the offering that you've got here. So what is that? How does that play into like the future of this product?
Yeah, I can talk a little bit about what intents would mean and, kind of how it means in our case. We've noticed in a lot of the projects, everyone has a slightly different take on what an intent means. In our case, it's kind of the debate between like imperative or declarative. So it's like rather than specifying the exact execution path you need to make a trade occur, it's more specifying your desire of what the trade is and then letting this community of solvers go out and figure out what the best solution is. So it's really about, making your intent, your desire more open-ended, but seeking out the best results for it and then letting people that are trained, thinking solvers, high-frequency traders, folks like that can come in and find you the best execution for that trade. So I hope that's kind of a high level of how we think about intents here at Cadence.
Yeah, that's perfect. I think let's dive into that maybe a little bit more when we talk about Symphony. But for now, I just want to even take a step back and just kind of get your guys' take on why build on Canto from the beginning. Like what drew you into that community specifically?
I guess firstly, we know lots of the core contributors personally, and they're really smart individuals. For example, I know you guys interviewed Scott a few weeks ago, so I'm sure you guys understand that part of it. But what also pulled us in was how they thought about DeFi and crypto really differently. First with their free public goods infrastructure, which kind of built the core of Canto. Then with CSR, and now you can see with Neo Finance and 1115 Tech, and now also with they're launching parallel EVM, but they're going to be the second chain after SAY to essentially be a parallel EVM chain as well, which helps perpetuals trading aggressively. So just overall, what we've noticed is that they're iterating and finding PMF over and over again consistently. And that's something really core to Cadence overall. So we spent 6 months just iterating on Symphony's technical side over and over again till it finally clicked and really worked. That's something we've seen a lot with like the whole Canto ecosystem. So overall, just being the first perpetuals protocol on a chain with high growth potential, being close to the core contributors, and also just being the flagship protocol on a chain that is growing is like the perfect combination essentially for the initial stages of a project. And you can kind of see this already now with Canto's launching their hackathon again in a few weeks. And you can see so many projects on Canto for this hackathon are planning to build on top of Cadence. They're like thinking of ideas like how can we build on top of Cadence and how can we make leaderboards or different like delta neutral strategies and things like that using Cadence. So yeah, that's kind of why we chose Canto.
Yeah, Vivaldi, I love that. I've been drawn into the Canto community a lot more recently. Like it kind of I was really interested when they first launched because they had a bunch of like interesting public goods infrastructure and like ideas that I really hadn't seen before. And then we had our podcast with Scott Lewis, which we released maybe like a month ago or something. But that drew me in even more. And then obviously meeting you guys, and, you know, I got the Cadence t-shirt. Won't say where I got that, but got it. And yeah, I just think they're doing like a lot of unique and interesting things in that community. And again, like no VC funding. It's like completely organic, grassroots. And I personally think it's quite undervalued right now. Not financial advice, but if you're doing any comparisons to other like chains with similar TVL and activity, I think it's a good one to keep your eye on. So I want to also talk about just like where you guys are again in your launch timeline here. You've released your product. You've got a bunch of milestones coming. I guess also, how's been the reception from the community? It seems like if people are now building on top of Cadence, that's news to me. That's obviously a good sign.
Yeah, I mean, I can talk to that and a little bit about how launch was received overall. So far, the sentiment is super positive. We were at ETH Denver recently, got to meet a ton of people from the community and, you know, get a lot of love from everyone building on Canto and, you know, from their core contributors. In terms of launch, you know, we've seen really good adoption so far. I think in the past day, we about tripled our volume. I believe we tweeted yesterday, we were at around 7 million. And then today, this morning, I think we crossed over 23 with around 40K in fees, which all, you know, get redistributed to Cadence and CLP holders. So we're pretty happy with the traction we've seen so far. Also, we've kind of done it with a more grassroots approach. We've had early incentive programs, different ambassador programs, you know, very active in our Discord and Telegrams. So really trying to make sure everyone feels, you know, included. And I think we've seen a lot of that love come out with the traction we've seen on the platform. And then the only other thing to add is in terms of, you know, kind of where we're at the launch from a technical perspective, since I'm CTO, I'd be remiss if I didn't talk about that side of things. It seems to be going really well. We've seen a huge increase in traction and, you know, surge of demand coming in. We've announced it before, but we had a partnership with Google Cloud in their Web3 Accelerator program. So it's actually pretty cool. We have like on-demand resources, funding from Google in terms of all of our servers. So everything we run is pretty much beefed up as much as it can be. So we're able to handle all this traffic and demand we've seen pretty well. So far, no downtime really, and everything's been, you know, running as expected.
That's awesome. I think we should get into Symphony. I would like to know kind of what it is at a high level, and maybe like when we should expect this kind of massive upgrade to Cadence to go live.
Yeah, so definitely I can get into Symphony. So Symphony is essentially an intent-based perpetuals aggregator that allows the trader to execute any position across any chain at near instant speeds. And in the future, execute anything from bridging, swaps, buying NFTs, something like even getting the most yield for your Ethereum across any chain instantly. So give me a quick example of how this really works, because I feel like that helps it really click for people. Is imagine, you know, you see the market picking up, you want to long Ethereum. All you really need to do is choose an asset, you know, Ethereum, and a leverage amount 10x, and our solvers basically go and find the best path, protocol, liquidity for this position, and they give it back to you. And let's say the solvers come back with, you know, the best trade is half on Cadence Perpetuals and half on GMX. The user can just in one click instantly execute this trade. And you can see inside this example, it doesn't really matter, you know, what chain you're on or bridging any assets or even worrying about something like gas fees. And at the same time, you're able to make a trade across several different protocols. And that's maybe called position sharding, actually. But that allows you to basically solve liquidity fragmentation. So Symphony was kind of built around these two biggest issues we see in crypto currently, which is liquidity fragmentation and user experience. And for example, for someone to onboard currently onto crypto, to make it just a simple perpetual trade on, say, like, let's say on GMX, for example, you can take them almost like 8 hours, you know, from figuring out what's a wallet, how to bridge assets, how to even get gas fees on L2. And then they're also confused what's an L2 in the first place. So someone with no crypto background should be able to use these systems we're basically building here, or less like what's really the point of it. And that's what Symphony's goal really is, to abstract all this base layer infrastructure of wallets, chains, gas fees, bridging, whatever it is, and just make it simple, make it almost like a Web2 UI at some level. And that's kind of our goal. And we're taking to such a big degree that we won't even have chains on our UI. So someone with no crypto background should be able to use it. So that's basically what came birth of Symphony. And we learned the only way to really make this possible and create this like hyper efficient market in crypto where protocols are able to communicate amongst each other instantly and things like that is to essentially let protocols communicate instantly across each other. So that's what gave birth to Symphony overall.
Maverick Protocol provides innovative liquidity solutions for token projects to customize, automate, and incentivize their liquidity with the highest efficiency in DeFi, all powered by Maverick AMM. Why has Maverick become the first choice for all kinds of token projects from stablecoins to LRTs? As the first dynamic distribution AMM, Maverick AMM provides automated liquidity movement modes which move your liquidity to follow price, keeping it where it does the most good. This enables Maverick-powered pools to process higher volume with lower TVL requirements and means that Maverick supports the highest capital efficiency for LRTs like WE-ETH. Maverick AMM also supports non-uniform liquidity distributions, making it easy to concentrate liquidity in shapes that fit each project's individual needs. Finally, Maverick boosted positions maximize incentive efficiency for protocols looking to bootstrap their token liquidity to precise strategic areas of a liquidity pool. Token communities like Lido, Aave, Swell, EtherFi, and KelpDAO have been bootstrapping TVL and maintaining PEG using Maverick tools. Ready to build liquidity with maximal efficiency? Go to app.mav.xyz/The Edge Podcast today.
When we first started talking, you kind of gave me a lot of background and reasoning for why you went down this path. And I thought it was actually pretty interesting. I think it's probably worth explaining maybe just like all the behind the scenes effort you did with like, I think it was like Layer Zero Labs and like the Axelar team to lead you to this. So maybe if you wouldn't mind just kind of like explaining that to the audience.
For sure. Yeah, so this whole idea started around 6 to 7 months ago, maybe a little before that. That's when we started trying to build out this intent-centric aggregator. And back then, we weren't focused as much on an optimistic execution approach. We were thinking more, I'm on chain A, I open a trade, that asset gets layer 0 or Axelar sent to another trade, and we attempt to open it. And we spent a lot of time working with the Layer 0 team. Obviously, we have one co-founder from Axelar, so we're very familiar with their tech as well for bridging. And at the end of the day, the quickest we could really get it down for a perpetual trade was closer to 30 to 40 seconds. And that was even on more quick L2s. So it wasn't on like Ethereum mainnet versus another slow one. It was on Polygon to Arbitrum, for example. So what we found was, that's great if you want to do normal bridging, but for perpetual specifically, it just wasn't fast enough to actually capture, if you want to do a quick trade, or you want to capture some market volatility like we're seeing now, it really wasn't fast enough. And that's what led us to this solution. With the solution being, let someone optimistically execute the trade with a solver fronting their collateral and have that 30 to 45 second callback, which we need Layer 0 or Axelar to validate that request, happen at the tail end. So happy to get more into the technical flow a bit of what Vivaldi was just mentioning, but that's kind of a little bit of story of what we tried working on and what led us to Symphony.
Mozart, maybe you can kind of reverse engineer that example that Vivaldi was walking through, or maybe just kind of further explain what happens under the hood in a Symphony transaction. And again, like try to keep it as high level as you can, but maybe just take that however you want.
Definitely. Yeah. I think a lot of light bulbs go off once we go step by step into what really happens with Symphony. So let's say a user navigates to a wallet that's connected with Symphony. And at this point, they'll specify whatever their intent is. And say their intent is, I want to, leverage shade long Canto at 30x, right? As soon as they signal that intent, their collateral needed for that trade is instantly locked. And then this intent is basically streamed by solvers who are running their own mempool. So once it's streamed by them, they're seeing that intent and they're going out and they're scanning for the best possible execution for that. So they see, I want to leverage log Canto. They're looking out across different blockchains and different protocols and seeing where that liquidity can exist. And they basically return those solutions. The best few solutions are returned to the user. and the user will go ahead and sign a user op, which is a account abstraction-based transaction on whichever solution they think is best and they would prefer. And these solutions are optimized in terms of, lowest slippage, lowest fees, best execution price. Different things like that would basically determine how the best one is selected. Once they sign that transaction, it's sent over to the destination chain, technically the AA base bundler of the execution chain. And that position is opened on the destination chain with collateral from the solver. So once it's open, then it triggers a layer 0 or XLR callback. And that XLR callback is pretty much saying a true or false. So true, the position was successfully opened, or false. If true and it gets sent back, then that initial collateral I mentioned in the first step that got locked up goes to the solver because they successfully opened the position for the user. And if false, if the solver didn't actually open it or something failed, the initial user just gets their collateral back. So what we're really accomplishing here is that the position and that price capture you wanted gets opened near instantly, but that 45 second period of doing that validation step happens more on the onus of the solver and doesn't really infect you getting the price you want or closing the position before liquidation or anything like that. So we're trying to give the best of both worlds with near instant execution, but still the security of battle-tested systems such as XLR Layer 0 that really validate the request on the end state. So hopefully that summed it up well.
Guys, before we got started here, I know you've made mention of a Cadence stablecoin. I'm curious, how does that fit into the design of this Perps protocol and what Symphony will be?
Yeah, definitely. So I guess going a little back before that, to really make Symphony to the level we want it to really be, you need to have a type of perpetuals protocol or some productive system before that. And that's what Cadence Perpetuals is. Lots of intent-based protocols you see currently, they forget that if you just launch an intent-based protocol, the only way to really make revenue is by just charging very high fees to the users. That's the only really way for an intent-based protocol to make a good amount of revenue to sustain itself. So by first launching Cadence Perpetuals, we're able to essentially have productive assets, have protocol-owned liquidity, and start generating revenue without being fee leeching from users, and make it actually sustainable in the long run to make Symphony get to the heights we really want to see it. And there's some other things as well. Going to the stable, you were talking about DeFi debt. Another asset we're adding into our pool is our Cadence stablecoin. And this is built off something called application-specific dollar, which is a Canto primitive they're launching. And essentially how it works, trying to keep it very high level, is that you can essentially LP into our CLP pool using any stable coin. And then that stable coin, let's say you use USDC, that goes into the background, that will be sold for note. And then note is supplied to the Canto lending market. And when you supply note to the Canto lending market, that gives you essentially 5% yield. And then in the background, we give you back our Cadence stablecoin. So that's a little high level of how stablecoin essentially works. It's pegged to note, and it's also earning revenue. So we'll be earning revenue from this Cadence stable at about 5-6% APY because they're all backed by treasury bills. And then we essentially give this revenue back to the users, or we might do token buybacks or things like that with this revenue as well. And the big reason why you need something like Cadence Perpetuals to really create this stable is because the cold start problem essentially for liquidity for stablecoins. A stablecoin is really nothing and has no value without liquidity. So by using this and using our own pool to really generate this liquidity, we're able to grow the stable to, have very solid liquidity, very usable liquidity, and lots of active trading with it. And then we can finally make this Cadence stable in the forefront. And the reason why we want a stable in the first place is for omni-chain systems. When it comes to Symphony, you really need something like an omni-chain stable at some level to first pay solvers, because solvers could be on different chains, for also, to pay solvers, and also for revenue accrual, gas payment tokens, and different systems which aren't the same on every single chain. For example, you can make a trade for gas payments that are different on Canto compared to Ethereum. But if you have an omni-chain stable with lots of liquidity and usage, that kind of solves that issue at some level. So that's kind of why, that's another use case of why we're, using Cadence Perpetuals, for Symphony and things like that.
Guys, would you say the end game is to compete with other Perps protocols on other chains, or what I'm understanding about Symphony, I mean, it feels like as these other perps protocols do well on other L1s and L2s, if the vision plays out here, you're like a mothership for perps trading on Canto, but you're also able to access liquidity across these other chains. So, I mean, do you feel this is more positive sum, or like, do you have to ultimately compete with, some of the perps liquidity that you're going to be aggregating?
Yeah, I can start off with that, and then most of you have anything to add, feel free. So I would say that the cool part and the interesting part about Symphony is that Symphony only grows and gets stronger as crypto grows and gets stronger, essentially. As perpetual protocols improve, and they will continue to improve because overall perpetuals, decentralized perpetuals have some of the best PMF we've seen so far in crypto. As they improve and get better, Symphony just gets stronger and gets more effective at finding the best trades across every single chain. And the end goal with that is actually beyond just perpetuals. It comes into things like bridging, swapping, buying an NFT at the lowest price, getting the most yield for your Ethereum, and different systems like that, which as crypto expands, these opportunities will become more, let's say, spread out across different chains, spread out across different protocols. And that's where Symphony comes in and kind of just like makes everything just kind of like come back together at some level and create this like more equal competition between chains. So then there's no reason really to go and like fork a protocol on a new chain, because your chain can already communicate with a different protocol, which is already doing that exact thing on a different chain. So it kind of creates this like more hyper efficient system, we keep saying, inside crypto, where there's no reason to keep forking. There's no reason to make duplicate protocols, because every protocol is essentially talking with each other. And that's kind of the vision we see for Cadence in the future and Symphony and everything.
Yeah, I think one thing to add is, if we were to think about where we see Symphony, in a year and a half, Symphony is going to evolve more to almost like an infrastructure play. We've already been in talks with different wallet teams at major exchanges and different wallets of how can they, for example, integrate Symphony in the back end to handle that aggregation type work where just in their wallet, someone wants to do the long, okay, it's handled by Symphony in the back end. So right now, of course, we have Cadence Perps, which is a retail consumer-facing app. But as Symphony evolves, we see that being more a back-end infrastructure play, connecting these different protocols together.
Let's just talk a little bit about the Cadence token. It's CAD. What can you explain about that? It seems like it's set up for like maximum value accrual. What else can you tell us?
Yeah, definitely. So CADs are token, and it's basically the core of what we're building everything around of. One of the core tenets we think inside DeFi, and I'm sure you guys have seen as well, is the whole goal is kind of to take away centralized parties away from the two other sides of the trade or two other sides of the lending market or whatever it is. And this basically is because like these centralized parties make about 95% of the revenue usually. A simple example people use in DeFi a lot is that when you put your money in a savings account in traditional finance, they'll give you maybe like 1% APR max, but in the background, they're obviously earning like 10% or something like that by rehypothecating your money. So that's one of the core tenets of Cadence as well. That's why we give like 100% of revenue distribution back to CAD stakers and liquidity providers on Cadence. So that's one of the big core tenets of it.
Mm-hmm. And we see additional value accrual as we flow into Symphony as well. For example, we have solvers coming into the network. And in order to become a registered solver on the platform, you need to stake our token. So that's another form of demand. Solvers will get some of their fees paid back in the Cadence token for supplying optimal trades and getting selected. We get asked a lot about what happens with malicious solvers, and this is also where Cadence token plays in. So if a solver is staked and they were to supply, a malicious trade or something that had a lot of MEV, then slashing would occur, in which the Cadence token they have staked up into our platform could face some level of slashing for providing some sort of suboptimal solution that was intentionally malicious. So we see a lot of interesting dynamics around the Cadence token play forward with Perps, but especially as we get into V2 for Cadence Symphony.
Guys, I think this is a great place for us to start to wrap. So I want to remind our audience to first learn more about Cadence by going to cadenceprotocol.io. They can follow Cadence Protocol on Twitter. They should also follow Vivaldi 0x and Mozart Cadence. Those are Vivaldi and Mozart's personal Twitter accounts as well. And then, guys, just would love to end on like what's next in the next 6 to 12 months. Any final bit of alpha you can share? When is the coin trading expected to go live? Also, when is Symphony potentially going to go live? Anything else you can share?
Yeah, definitely. So some of the big things coming up shortly are we're doing a whole referral system we're launching this month. Where you can like basically give your links out with your name, let's say like Cadence Protocol / DeFi Dev, for example, and you can share that around and people can join in and you get a revenue accrual from them. So that's something coming out this month. Next month's going to be the whole Cadence stablecoin. Will be coin getting listed next month. And then after that will be just more RWAs and different systems coming in the next few months leading up to Symphony essentially. Then Symphony will likely do, the full launch will be in Q3 of this year. Around July or June, we'll likely do like a private testnet beta. So if you guys are interested in that, feel free to reach out to the Cadence Protocol Twitter or to us on Discord. And then, definitely appreciate you guys having us on and, letting us share some information on Cadence. And we'll see you guys in the future in person again.
Thanks everyone for tuning in. If you're a talented founder or developer, please consider reaching out to our team at fourthrevolution.capital. And for future episodes of the Edge podcast, please check out our link tree at edge_pod.